So you've got an independent contractor agreement with your new worker. Does that agreement alone and giving them a 1099 in January mean that you are legally safe from misclassification? The answer and the thousands of dollars in risk attached to it might surprise you. Today, I'm breaking down the top questions I get about 1099s versus W 2s. If we haven't met before, my name is Maritza Shea Nelson, and I'm a business and nonprofit attorney. I help entrepreneurs, founders, dreamers, and innovators pursue their passion without worrying about legal stuff like the difference between 1099s and W 2s might come back to bite them. So let's get right into it. First of all, why can't I just call everyone a contractor to save money? This is one of my favorites. It is very tempting, especially for smaller businesses and nonprofits. Hiring contractors helps you avoid paying workers' comp, unemployment insurance, and the employer share of Social Security and Medicare taxes. However, the cost of being wrong is significant. Misclassification can lead to personal liability for you as the business owner for back taxes, unpaid overtime, interest, and penalties. In one Ohio case, a business was ordered to pay nearly $6,000 per worker in back wages and liquidated damages just because they had misclassified those workers. What is the right to control test? So if you've ever tried to look at this on the internet, you've done some Googling, maybe you've been asking around AI, you've probably heard that in Ohio, and very similar to many of the federal standards, the core of the relationship isn't your contract. Right? Just because you call it a duck doesn't make it a duck. Just because you put independent contractor at the top of a piece of paper and got the worker to sign it is not the end of the analysis. I often tell clients that whether or not a worker is an independent contractor or an employee is not a choose your own adventure. It's not up to you. It is a legal definition with multiple legal tests that have to be satisfied. And at the end of the day, the core of so many of these tests come down to the right to control the manner and means of how the work gets done. If you're telling that 1099 what to do, when to do it, where to do it, how to do it, here's the equipment to do it, here's the laptop, here are the software, here's all the steps, here's some training on how to get it done, that's an employee no matter what your agreement says. When you are truly hiring an independent contractor, people like myself as an attorney, your accountant, maybe that independent bookkeeping firm, the only thing you really control is the end result. You're telling them, I want you to go get X done. I don't really care how you do it. I just need it done, right? You are independent. You figure out how to do it. The third one I often get is, well, I'm paying this person hourly, or, they're not getting a salary, they're not full time, so that must make them an independent contractor, right? Absolutely wrong. The fact that you can't afford to pay somebody a salary, the fact that you chose to call them an independent contractor, again, none of those things matter. It is really surprising to me how many small business owners, nonprofit directors still think that part-time must equal independent contractor. There is a such thing as part-time employment. You can have W-2s that work part-time. You can have W-2s that work very limited schedules. But the idea that I can't afford to pay a salary, so therefore they must be an independent contractor, absolutely wrong. The next question I get a lot is, well, if they are a contractor, do I really need a written agreement? Do I really need to hire an attorney? Can I just use this template I found online? Do we even need a contract, right? They got the work done, I paid them, and that's the end of that. And while a written contract doesn't prove that someone is a contractor, it is absolutely essential for protecting your business or nonprofit. When that contract is done right, it will line up against the various legal tests that come into play. So when we talk about the right to control, that contract will have in there language that makes it very clear that you don't have the right to control how the work gets done. So that's what we're really looking at when we put together those independent contractor agreements, is how many of those factors can we meet? How much can we show that this person is truly independent and therefore is properly classified? And when you get some of these really bad templates from online, you start trying to doctor them up yourself. Maybe you oversimplify them with AI. You start to lose some of the legal nuance that we need in order to satisfy these classifications. The next question I often get: how does the IRS see things differently than the state of Ohio? And this is where it gets tricky. Remember, there is no one test, there isn't just one definition of independent contractor. The IRS focuses on behavioral and financial control. Ohio uses different tests for different purposes. So there's a test for workers' comp. There's another one for unemployment. There's another one if the person is bringing up wage and hour claims. So you could technically be compliant with the IRS for tax purposes, but still be in violation, say under the workers' comp rules if that worker gets injured and tries to file a claim, or under the unemployment rules if that worker gets fired and tries to file for unemployment. Lastly, what are the red flags for an audit? So this is probably the best question. What's actually, like, not just all the legalese, not just the tests that we can talk about, but in the real world, what is most likely to trigger an audit and cause all of this stuff to come tumbling down on your business or nonprofit? After all, lots of businesses get away with making people independent contractors. So where's the risk truly? And in reality, here's where we typically see businesses and nonprofits run into problems. It's when a worker files for unemployment and lo and behold, you weren't paying into unemployment because you thought they weren't an employee. The worker gets injured on the job and then they go try to file for workers' comp. The worker files a formal complaint because they haven't gotten paid all of their wages or they think they should have been entitled to overtime. Or it's the disgruntled former worker. You let somebody go and they try to claim benefits, or they're just looking for a legal justification to get back at you because they're mad about getting fired. They're looking for a reason to say that they should have been an employee and you discriminated against them or you fired them wrongfully. The other thing is that for tax purposes, one of the big red flags for those agencies is a worker that just gets a single 1099. That's the only thing they show on their taxes. And that obviously starts to look like someone that's been misclassified, because if they were truly independent, they'd have other clients. They'd be getting 1099s from multiple places, not just from you. The big thing that you have to remember is that when one of these government agencies starts to look under the hood, they don't just look at the one worker that triggered the complaint. They come in and they look at your entire workforce. So the more 1099s you have, the more of these misclassification issues are likely to come up, the more those penalties can start to multiply. And as I've said before, not only does that one agency look, they often share information with all the other agencies so that they too can seek back taxes and penalties and interest. So getting your team structure right is absolutely critical, especially as your business or nonprofit starts to grow. If you're preparing to hire that first team member, you're transitioning from solopreneur to having some staff, or you've realized that your current contractor might not actually be a contractor, it's time to take action. My clients range from startups to growing businesses and nonprofits with nearly 100 employees across a wide variety of industries. If you love what you do, but you want to make sure that these hiring milestones don't attack your personal savings, visit msnlawoffice.com today to schedule a consultation. And while you're cleaning up your hiring practices, check out some of the other things that you can do in your contracts to minimize the chances that you get tied up in very expensive, long, drawn-out litigation. Watch the 3-step plan to avoid litigation. Until next time.